while the world scientists are looking for a cure and a prevention for the coronavirus, the world's central bankers are also looking for ways to save their economies from the coronavirus and its impact on businesses. The RBI governor has said that the central bank is ready for any kind of response and rate cuts are an option. This comes just a day after the US Fed slashed rates by 50 basis points, cut rates really by 50 basis points in an attempt to shield the American economy. But it's not just the US. We've seen action in Australia, China, and several other countries, among others, as the world braces for economic impact. So what should India do? What can and will India do? To speak on this, I'm joined now by Mythili Bhusnurmath, Consulting Editor, ET Now, and Saugata Bhattacharya, Chief Economist, Axis Bank. Welcome to both of you and thanks for speaking with us today. Saugata, let me begin with your take. It's now being expected that we'll see some action this week from the Reserve Bank. Will there be a rate cut, and will a rate cut really do the trick?
So again, I mean, first, thanks for having me on the show. I mean, it's a bit humbling. I mean, an economist talking on a public health issue generally. But be that as it may, it's really difficult as of now to predict a rate cut before the policy. It all depends on the way that the infectious, the contagion spreads from the current numbers that we see. So if there's a rapid deterioration, what is inevitably likely to happen, and even now, so the ancillary industries that support movement of people, tourism, freight, a whole lot of other services related industries, schools, education, colleges, so all of that will definitely be much slower than what it had. People are avoiding moving, people are avoiding travel, so aviation will take a hit. So there are a significant numbers of what could be a potential supply shock. The demand implications are also relatively significant. It all depends on how quickly the contagion spreads or the contagion dies down. It's very difficult to predict as of now. So depending on that, I mean, and as you saw, equity markets today actually took the Fed's actions, the unexpected 50 basis point cut, relatively adversely. So I'm not very sure that will give a significant amount of confidence. And whether or not the MPC in an emergency move within the next 7 days, 10 days acts, I think the Reserve Bank of India has sufficient tools other than the rate cuts, the repo rate cuts, to try to see if they can stimulate the economy.
Well, I'll come back in a sec and ask you what those other tools are. But Mythili, your take, rate cut. Right now, we remember that the Reserve Bank sort of hit the pause button after inflation started rearing its head, and those factors have not entirely dissipated, have they?
Well, Tamanna, the question is not whether the Reserve Bank can or will cut rates. The question is whether the Reserve Bank of India can afford to be an outlier when so many other central banks are cutting rates. So perhaps partly to ward off criticism that the Reserve Bank did not do enough, it might cut rates. The larger question really is whether the rate cut will have any impact at all, particularly because we know that so far the rate cuts by the Reserve Bank of India, 135 basis points, have not really made much of a difference to growth. And in fact, even as the US Fed cut rates, Jerome Powell is very clear, and I quote, he said that a rate cut will not reduce the risk of infection, and it won't help a broken supply chain. So even in the US, where there are supply factors, in India we don't really have a supply question, but we have a demand question. So even in the US, Jerome Powell is very clear that it will not help reduce the risk of infection. So at a time like this, the only reason the Reserve Bank perhaps can cut is because it knows that when it looks through inflation, inflation is not a worry, particularly because fuel prices are likely to stay low. So and at the same time, it also knows that there is so much of liquidity and it really hasn't made a difference. So the Reserve Bank of India can afford to take that risk. The larger question really is, will it make an impact at all? And my sense is it will not.
So what will really help in that case? And, Saugata talked about other measures that the Reserve Bank really has. I mean, keeping up with the rest could be, one factor. But beyond that, what really can the central bank do right now to calm nerves? Because that seems to be the biggest issue. We don't know how many people the virus will affect at the end of it, but it may flatten a number of businesses before it even comes to that.
Tamanna, I presume that question is addressed to
Yes,
me. I think
yes.
what the Reserve Bank could do, but I've always been a votary of the fact that monetary policy has very limited scope at a time like this. Monetary policy is most effective when inflation is high, not when growth is low. There the ball is in the government's court. It's a fiscal policy, and increasingly you will find all over the world people are calling for fiscal action by governments. And in fact, government could kill two birds with one stone, because if you look at China, look at what China did. It built hospitals in 10 days. Now that's nowhere near possible in India. But if the government were to use some of that fiscal space, and I do believe it has the fiscal space, to build hospitals, that would be creating necessary infrastructure, sorely needed infrastructure. It would create jobs, it would put income in the hands of people, and it could spur growth because there would be demand. So you could have a case of killing two birds with one stone. So government can do much more than the Reserve Bank. The Reserve Bank on its part could do other things in terms of macro-prudential. It could give some kind of forbearance for the NPAs, for the kind of capital adequacy. Even in the case of the Bank of England, the former Bank of England Governor Mike Carney had said that we need to think in terms of lowering capital adequacy requirements as counter-cyclical tools. So I think the Reserve Bank should stop getting fixated about interest rates. Lower interest rates will not really help. We've had the case of RBI absorbing liquidity, more than 2 lakh crores. So that means there really are no takers. So the ball, I believe, is not so much in the Reserve Bank's court as in the government's court.
Well, what can the government do then? Let me take that question to Saugata. And of course, with the non-rate cut measures, you think the Reserve Bank can and will look at?
No, I absolutely agree with Mythili that, it's in the order of things. This is firstly a public health problem, then a series of fiscal measures, particularly higher spending to try to counteract some of the induced demand effects of the supply shocks that come in. I actually disagree with Mythili a bit on the logistics, on the global value chain part. India is sufficiently, there are many areas in India, electronics, pharmaceutical APIs, etc., where we are dependent on Chinese supplies, and that can create a supply chain problem. But other than that, in the order of things, in the sequence of things, so the government has to play a large part, so it has to spend more. But in doing so, it has probably to borrow more, and that has an effect on interest rates. And that's where monetary policy comes in. Not through direct rate cuts, but all the other measures that I was talking about, increasing the LTROs, putting in a special deposit fund, etc., which might serve to counter or temper or moderate the adverse impact on interest rates, which a higher fiscal push is likely to generate. So, some would criticize this as monetizing the fiscal deficit. But in a situation like this, where an already weak growth system is made even worse by a public health problem and the associated impact, I think the fiscal measures have to come in, and that is where the monetary policy, not just a rate cut, but all the other liquidity measures, the microprudential measures that Mythili talked about, might serve as a counter to the adverse impact of the higher fiscal spends.
Mythili, what can now the government do on its part? The gun's always trained on the RBI, cut rates. They may cut rates, and we might see it this week. You're saying that the impact will be minimal, if at all. But what else can be done? There's already been one series of meetings where the finance minister has met various industry leaders and asked them what help they need, etc. But we've gone beyond that point, right?
Well, yes, as I said, the impact will be limited for the simple reason that, yes, Saugata is right that we do have certain industries, particularly, there is a strong link with China. If you don't have supplies coming in, it could lead to some problems with supply. But the problem is that even if you lower interest rates, unless there is demand for credit and banks are willing to lend, you are not going to see such any credit offtake. The problem really is that the solutions to increasing bank credit, which is one of the biggest obstacles really to growth in the country at the moment, is the fact that the solutions really lie largely outside. Today, no public sector banker is willing to lend for fear of the 3 C's, the CVC, the CBI, the ED and all the other paraphernalia that comes attached with when you're a public sector banker. So, and here we have the finance minister telling bankers, lend, and almost compelling them to clear all the loan applications. What happens 2 years down the line when these loans turn bad? Then questions will be asked to the same bankers. So I think it's important to tell bankers and give them that kind of confidence, and that confidence will come only when the government gives them some autonomy, backs off, improves the governance of public sector banks. Now that cannot be done overnight. So what RBI can do, I think, is try to have some forbearance measures. Say that even if you have NPAs, just as you've given some leeways in the case of the MSME sector, saying that even if you have NPAs, you can allow some kind of restructuring. Yeah. Allow that all maybe to a larger section. In the case of telecom, we're considering certain SOPs. Why not for other sectors as well? And I firmly believe, as I said, government must start spending. That really is the only sure quick fix answer.
Absolutely. We'll wait and watch and see how governments and the central bank deal with the outcome, the economic outcome of the coronavirus as it disrupts plans all over the world, including for several businesses. Thank you so much, Mythili and Saugata, for joining us.